Have you ever wondered why in the world of crypto, some people get rich in seconds while others lose absolutely everything? Meet Tolly, and Tolly has firmly decided that working at a factory is for losers, and his true calling is to become a crypto millionaire. Tolly opens TikTok, sees a 19-year-old successful trader standing in front of a purple Lamborghini, and catches the wildest case of FOMO. Time to buy! Tolly screams, throwing all his life savings into an absolutely random meme coin that has just skyrocketed by 1,000%. He is already mentally picking the color of his future yacht and imagining how satisfyingly he will fire his boss. But the reality of the crypto market is merciless. Literally 5 minutes after Tolly's purchase, the chart reverses. The coin drops like a stone, turning our investors' entire deposit into literal pennies. Tolly has officially become a hamster. And there are millions of Tollys out there on the market. They come looking for easy money, but instead, they give away their very last cent. Why does this happen? It's simple. The retail investor is playing on someone else's field by rules they don't even suspect. The market is not chaos. It is a perfectly tuned machine designed to pump money out of ordinary people's pockets and straight into the vaults of major players. The ones the market calls whales. Who exactly are these mysterious whales? They aren't just people with pocket money. These are institutional funds, investment banks, and early Bitcoin tycoons who own tens of thousands of coins. When a whale flaps its tail, meaning they buy or sell a massive volume, the entire market goes into a storm. But their ultimate superpower is manipulating the psychology of the crowd. Whales know perfectly well that the average person is greedy, easily scared, and impulsive. They use the media, paid influencers, and fake news headlines to control your every move. The scheme is always the exact same. First comes the accumulation phase. The whale quietly, without any noise, buys up a coin at the absolute bottom when nobody wants it and everyone is panic selling. Then, the pump phase begins. Suddenly, every single media outlet starts screaming that this coin is the future of humanity. Influencers show off their charts promising 100x, and green candles are blazing on the screens. At this point, the hamsters completely lose their minds. They rush to buy the coin at the absolute peak, thinking they are catching the last train to a wealthy life. And guess who they are buying it from? Exactly, from that very whale who is locking in huge profits right on top of their greed. This is called a market crash or a dump. But greed is only half the trouble. The second trap is fear. As soon as the whales sell off their bags, they start artificially flooding the web with terrible news. Crypto will be banned. Exchanges are shutting down. Everything is crashing. The chart plunges. Terrified hamsters, who just yesterday dreamed of luxury yachts, start panic selling their coins for next to nothing, desperate to save at least some pocket change. The whale at the bottom opens his bag once again and buys those exact coins back, but this time 5 times cheaper. The circle is complete. The whale got richer and the hamster is left broke. And it's one thing if you just lost money on a price drop, but many managed to lose it even before hitting the sell button, keeping funds on shady wallets or trading on sketchy overnight no-name exchanges. Crypto is a war of capital, and going into this war through shady peer-to-peer exchangers or no-name platforms is like showing up to a gunfight holding a banana. If you don't want your balance to instantly vanish to zero because of a platform scam, you must use only top-tier licensed global exchanges with billions in proven reserves. That is why successful investors choose the absolute giants: Bybit, OKX, or Binance. All the official partner links are waiting for you right now in the description below. By signing up through them, you'll unlock exclusive discounts on trading fees, so you don't give away your hard-earned money for nothing. And you can claim massive deposit bonuses up to $30,000. Stop feeding scammers. Head over to the description, click the links, pick your exchange, and let's move on. All right, so we figured out the whales. But hamsters have another enemy, one that is far more dangerous than any whale. And this enemy lives right inside them. It's gambling. When the regular spot market seems too boring and slow for a hamster, they discover futures. Oh, futures trading is a graveyard for millions of deposits. A rookie trader sees a magical button called leverage. They are told, look, you only have $10, but if you select 100 times leverage, you can trade as if you have a whole 1,000. Sounds like a legal cheat code for infinite wealth, right? But the hamster doesn't understand the math of liquidations. If you take 100 times leverage for your profit to double, the coin only needs to grow by a single percent. But if the coin drops by just 1 miserable percent against your position, the exchange instantly closes your trade and takes all your money. This is called liquidation. Now remember that the crypto market is the most volatile market in the world. A coin can drop 1% in a fraction of a second simply because a big player sneezed into the order book. Whales love creating what we call scam wicks, or long and short squeezes. They deliberately push the price aggressively up and then sharply down to trigger liquidations on all the greedy players using high leverage. In a matter of seconds, billions of dollars burn to ashes. Tolly's screen flashes bright red, he receives a liquidation notification, and his $100 turns into absolute zero. Trading futures without a strict strategy, without understanding risk management, and with massive leverage is not investing. It is pure gambling. It is no different from betting on red or black at a casino roulette table. Except at a casino, you at least get free drinks. If you came to the market to strike it rich overnight, attempting to multiply your balance 100 times over, the market will destroy you, sooner or later, but with a 100% guarantee. But how can regular people make money if they don't have time to stare at charts 24/7? How do you avoid becoming whale food? Actually, everything has already been automated for you. To profit from crypto, you don't need to be a technical analysis genius or risk it all on high leverage futures. You just need to use legitimate automated tools. On top-tier platforms like Bybit, OKX, and Binance, there are built-in, completely free trading bots and copy trading features. This means that with a single click, you can activate a grid trading bot that will automatically buy low and sell high on the spot market while you are fast asleep. Or you can easily turn on copy trading and automatically replicate the exact moves of professional traders with a 90% win rate. All the links to these automated tools are listed in the description right now. Click them, activate your free trading bots, and let your crypto bucks work for you. Don't waste time, go check the description. Now, let's talk about how the top 5% of successful investors think and act. The ones who consistently take money from the hamsters. Their biggest secret is cold calculation and ruthless discipline. Rule number 1 of a successful investor: forget about shitcoins and meme tokens unless they have fundamental value. 80% of your portfolio should consist of rock-solid assets, Bitcoin and Ethereum. No, they won't jump 100 times in 3 days, but they won't dump to zero either. And over time, they always beat inflation. Rule number 2, diversification. Never keep all your eggs in one basket and never put all your capital into one coin. Split your funds into different sectors, layer 1 blockchains, stablecoins, and leave only a tiny fraction for high-risk gambles. And rule number 3, the most powerful weapon against whales, the DCA strategy, or dollar cost averaging. Instead of throwing your entire lump sum of cash all at once like our friend Tolly did, a successful investor breaks that amount into pieces. For example, he decides to buy Bitcoin every single week for $10, regardless of whether the market is going up or crashing down. If the price goes up, his portfolio value increases. If the price drops, he simply buys more coins for the exact same $10, lowering his average entry price. In the end, when the market reverses, this investor walks away with massive gains, while the hamsters are still struggling just to break even. Crypto is a marathon, not a sprint. The ones who win here are the ones with the strongest nerves and a systematic approach. Now take a look at Tolly. He turned off futures, deleted TikTok containing all those fake crypto gurus, registered on a secure global exchange, turned on a spot grid bot, and started investing systematically. Real, steady dollars finally began accumulating on his balance. He no longer panics when he sees red charts because he knows a market dip is just a golden opportunity to buy cheaper. The crypto market offers mind-blowing opportunities, but it never forgives stupidity. You can choose to remain a hamster and keep funding the massive vaults of wealthy whales. Or you can change your approach, get your emotions under control, and start playing by the rules of the pros. Stop being free fertilizer for someone else's financial success. Right now, head down to the description below this video. The 2 most reliable links to start your journey are waiting for you there. Claim your bonuses, activate your free trading bots, and protect your hard-earned money from foolish mistakes. Make sure to subscribe to the channel, smash that like button so the YouTube algorithms show this educational content to the right people, and write down in the comments how many deposits you've already managed to blow out of pure recklessness. See you in the next videos. Trade smart, and I'll see you at the top.